Hello, my name is Steve Bigelow with the Candlestick Forum. We're going to kind of concentrate on this fallacy that most money manager, uh, talking heads on the financial news stations tell you can't do, and that is you can't time the market. That's poppycock. Timing the market becomes very easy, knowing where candlestick reversal signals are occurring and what your indicators like the T line are telling you. This is why I always tell people, if you hear somebody advising you that you can't time the market, get away from them as fast as possible, because they don't know how to time the market. Candlestick analysis provides signals and confirmation indicators that tell us when a reversal is occurring and how long that trend will last based upon the T line and looking for a buy signal at the bottom of a downtrend. Currently, the markets are trading lower. They've broken through this level on the NASDAQ. So if you hear all the talking heads tell you, oh, it's getting near a bottom, or you're looking for a 7% or a 10% pullback, that's time to be buying. Let the market tell you what the market is doing. The most accurate indicator of all is the market itself. So anytime we can use 2+2 analysis, like we saw on a bearish kicker signal at the 50 in the overbought area and closing below the T line on BABA, and the market's heading lower, that just gives you that much more probability that you're enhancing your ability to recognize when a downtrend is in progress. So if you're long here, and I point this out because this used to be me, I would sit here and say, oh man, when is this trade that I thought was going to be good is going to go back up? I just can't stand the pain anymore. Well, that enhanced my ability to go back and say, all right, where should I have sold? There's my sell signal. There's an indication they weren't getting back up above the 50. I should have been out in this area instead of wondering when I should, or when is this going to turn back up so I can go long. Now I'm much more comfortable in these type of trends, knowing that I'm short and making good money, where it used to be I was just dying because I was losing money every day. So this is not rocket science. If you see bearish signals, especially at major levels that everybody else is watching, a bearish Harami right at the 200 and a close below the T line, bounces back up to the 50, a bearish Harami. What's our bearish Harami tell us? The buying has stopped. And how long do you keep your downtrend? As long as you don't see a sell signal and a close back up above the T line. If you can recognize what the trend is doing, then it becomes much more enhancing to see a bearish engulfing signal right at a resistance level during the downtrend. That just greatly improves the probabilities the sellers are still in control. So you're seeing that all over the place. Shopify, downtrend, bounced back up. There's your bearish flutter kicker signal, telling you you got a wave 1, wave 2, wave 3. So here's the 2+2 analysis, which we will be doing as a training next this Saturday, the May 14th, on the 3 different variations of a kicker signal and how they greatly improve your ability to be in the right trade at the right time. A bearish flutter kicker signal tells you there's still going to be a lot more downside. So the basic ABCs of candlestick analysis is you identify the buy signals, like your Morningstar signal, and you can identify the sell signals. Valero was a strong chart, but notice your hanging man, and they opened it lower today. That's where you closed out the position. That would have been more confirming with the fact that your market was going to open much lower, and you were opening lower after a hanging man. which is one of your major sell signals. So again, if you listen to somebody and they say you can't time the market, get away from them as fast as possible, because these signals work and they give you much more improved ability to see which direction a trend is moving. That'll be it. We'll see you in the chat rooms.